So, hi, good morning, everyone, and thank you for joining us in today's briefing. The meeting will be starting in 5 minutes. Thank you. Good morning. I'm Teresa Cabalda from Investor Relations, and welcome to Cebu Land Masters Investors and Analysts Briefing for the first quarter of 2023. A few reminders before we start. Copies of the presentation will be available in the company's website at www.ir.cebulanmasters.com. Also, participants will be kept on mute as we are in a webinar format. For any questions, you may use the Q&A box provided at the bottoms of your screen. Just indicate your name and organization so that we can address you accordingly. All questions will be addressed during the Q&A session, and the meeting is recorded and can be accessed on the company's website right after the meeting. So without any further ado, I am turning you over to our Chief Operating Officer for the key highlights.
Hi, pleasant good morning, everyone, and thank you for joining us this morning. It's great to be seeing you a little more often. We just saw our analysts and investors 3 weeks ago for the annual report, and it's great to be seeing you again just after 3 weeks. And it's also great that we continue to share positive results to you, our shareholders and our analysts and investors. We started the year strong and solid. We posted a 10% growth in our parent NIAT year on year, and over 30% growth in our consolidated NIAT, which we are disclosing in our FS. I think more impressive is our robust top line growth across all segments, 33% growth in revenue year on year, from only 3.6 billion in the first quarter of last year to 4.8 billion in the first quarter of this year. If 3 weeks ago was any indication, where we were growing double digits consistently for the last 5 years, we are able to really sustain. Is how our quarter one outcome is like, that we're really able to sustain the double-digit growth across all our segments. And as you all know, a leading indicator of future sales is reservation sales. So there is strong sales take-up of 16% more year on year. This is over 5 billion in reservation sales. The exact figure will be reported by Grant later on. And we want to proudly showcase our balance sheet now with over 90 billion in assets, or 13 times more than our IPO asset base. But this is driven by very healthy assets, driven by an increase in receivables as the units become ready for takeout. Lastly, we are really continuing our recurring income push with the continued expansion of recurring revenue, and we'll report the growth in leasing revenue later on. So with that, our management team would just really like to report that we've been very productive in the first quarter. I think our optimism showed in the annual analyst briefing as well. So we're very happy to have another very interactive session with you, and we hope to have more questions towards the end of our presentation. So we can now proceed to the financial report by no other than Mr. Cheng here on my left.
Thanks, Franco. So allow me to walk you through the details of our first quarter financial statements as summarized by Franco. So our sale of real estates continue to anchor our business. It is more than 99% actually of all our recognized revenues. And it will continue to be this way for the next few quarters until, as it evolves into a more diversified and a more well spread out revenue sourcing, as some of our recurring income assets start to mature. But then this goes to show how sustainable and how robust our the foundation of our business is, which is housing. We keep repeating that we are simply doing what we've done best by serving the housing needs of the underserved markets where we operate. And it will take years, if not decades, to actually make a dent into those deficits, into those housing deficits, and that will continue to fuel our growth. So that translates into a 30% growth in our revenues and a growth of our gross profit of 29% from 1.65 billion last year to 2.13 billion this year. You see compression in our gross profit margins from two main drivers, particularly the two main drivers particularly are input costs. So the cost of raw materials. I think all of us are very much aware of the inflationary pressures from fuel to raw materials like steel and cement, which have begun to stabilize. And the other one are interest rate, which are capitalized in the cost of sales over a long-term basis. So we this year will be, at least there is going to be a lot of focus on managing our liabilities and our cost of capital, but it doesn't change the underlying fact that there's just so much more demand than there is supply. So we know we just have to manage our capital well. We have to keep our liquidity robust and healthy, and we know that there will be sales. We know that there will be enough demand out there in order to sustain this type of growth. Our operating expenses grew by 17%, which shows you that we know how to scale up in that we're leveraging our existing organization, technologies, and processes to drive a higher pace of revenue growth and actual sales growth than we are increasing our operating expenses. And I mentioned that, of course, interest rate expense is going up. In fact, not because of anything internally in CLI. If you analyze our credit ratings and the rates and the spreads we are getting from the banks, it in fact continuously improves. It tightens continuously, which means the banks and our funding institutions are giving us better and better rates. But as long as the baseline rates keep moving up, we do have some work to manage our liabilities going forward. Finally, so as we filter down to our profit before tax, it grew by 43%, giving us a consolidated net income of 1.17 billion, which is a 43% growth, and a parent NIAT of 888 million from 811, which is a 10% growth. And to those, I'll just quickly add here to those of you who have been following CLI lately. The rate of growth between our non-controlling interest and the parent NIAT will tend to fluctuate between them simply as a matter of timing. There are times that certain launches are under joint ventures, were launched in a certain period and achieve more percentage of completion in a certain period. But overall, in the long run, typically our joint venture business and results attributable to non-controlling interests are about 30% of our business, and to the parent, it's 70%. Okay, next slide, please. Just to put more context into where those revenues are coming from. So as always, what I see, this is a very important indicator, are unrealized revenues. So again, what you're seeing here is the amount of revenues and or the runway we still have yet to recognize. So to me, this is actually the more impressive thing, is that even as we continue to accelerate the recognition of our revenues, if you think about it, parang that's like usage of revenues, right? The rate at which we are recognizing revenues from sales that we were able to secure 2 or 3 years ago, our actual unrecognized revenues continue to grow to what is now 29.76 billion pesos. So in the first quarter of this year, our revenues grew by 33% to 4.78 billion from 3.58 billion in the same period of last year. And if I can draw your attention now to this table on the right, you could see that the revenue contributions have begun to equalize and stabilize across market segments. So during the pandemic, coming out of the pandemic, you could actually see that a lot of our revenue distribution came from our economic housing project, which is Casa Mira. So it proved to be the most resilient, the most sturdy of all housing markets, where the deficit is actually coming from. But emerging from the pandemic, as we go full throttle on the sales development and our percentage of completion, you could see a very a much more evenly distributed revenue base across market segments. So we see what we call a broad-based recovery of where our revenues are being generated. In terms of location, this is a very positive and encouraging trend for Cebulan Masters, where you see that this dark green portion is the amount of revenues or percentage of revenues that that Cebu is contributing overall to CLI, whereas uh, 39% is coming from Mindanao and 18% from Visayas ex Cebu, or all the regions outside of Cebu like Bacolod, Bohol, Iloilo, etc. So a good 67% or more of our revenues are already coming from markets where we expanded into. So this is another indication of why the company is bullish and optimistic with our growth and our ability to sustain that, because we have only just begun to expand in these markets less than about 5 years ago. In fact, Franco, we only just turned over our first project in Cagayan de Oro called Mesa Verde about starting last year. So we know that there is a lot of room to grow and accelerate our growth simply by replicating what we've done already the first time in these markets where we just newly established ourselves. Aside from that, I know this is small text, but this lends a little bit of substance to what I was saying earlier, that our recurring income businesses are continuing to recover as well and continue to ramp up their contributions. And as more and more of our recurrent income projects, from our hospitality projects, our office, retail, and rental projects come online, you should see these numbers also start contributing quite significantly. Slide, please. Our reservation sales, which is our leading indicator, or the amount of sales contracts we're able to actually sign up this year, continues to be very strong. Again, if the previous slide was a lagging indicator, it allowed us to recognize revenues based on projects we sold in the previous years, based on a percentage of completion method. What you're seeing in this slide is a leading indicator. So the numbers here are not yet officially reflected in our financial statements, but we are reporting to you the amount of sales that we generated, that were signed up from houses that we sold. So we sold 5.22 billion pesos worth of real estate products in the first quarter this year, which is a 16% growth from the same period last year. So we're looking forward to this type of growth as well, to be able to sustain this double-digit growth in the reservation sales, which again underpins how much the kind of demand and the sustainable growth that CLI is able to deliver. I think it also bears mentioning the split of where those sales are coming from. So this gives you a good flavor and a good idea of how sustainable our base is, which will also inform you about what kind of revenues and the quality of the reservation sales we're getting. So we're getting sales, 97% of them are from Filipinos, 3% are foreign, 58% are locally employed, 30% are OFWs, and the rest are business owners. And when we profile our buyers, most of our buyers are what we call primary buyers. They are not the other type, being investor or investors type, or where there's a little bit of speculative element. We of course welcome that, but if you think about how robust, and again, I call it the quality of the sales that we have, which will then tell us and allow us to project our delinquency and cancellation rates. This is the one. This is a number that gives us very good comfort. And I'll share with you a little bit more details later when we break down where those balance sheet numbers are coming from. Next slide, please. So here, our balance sheet, you can see our balance sheet has also grown in line with our profit and loss statement, which only reflects the fact that our balance sheet is growing to slowly reflect the amount of sales that we've already closed in the past few years. And I quickly highlight the amount of receivables we are getting or we are putting on our balance sheet. So this is already close to 39 billion pesos worth of receivables. And this does not yet, in fact, count the unrealized revenues or unrealized sales that I presented earlier in my slide. So if you compare the upcoming receivables that we have with our interest-bearing liabilities, they're almost equal. Not counting the fact that I still have close to 30 billion pesos of revenues that I am not yet recognizing on the financial statements. This is not yet even counting the fact that I have inventory, almost 20 billion pesos worth that we are building and who may not have qualified for revenue recognition yet. And even raw land that we are developing or those that we have not yet launched, they're here. Plus the value of those hotels, offices, and retail units that we have on our balance sheet that we are currently operating, that are foundational assets into a potential future REIT. These are all elements that show how stable our balance sheet is. I hope my fellow shareholders have begun receiving their dividends as well if you look at your brokerage statements. But so that is a continued commitment of Cebulan Masters to share our net returns to our shareholders. So we could see that even after that, our retained earnings continue to go up, and we're pretty well capitalized. Next slide, please. I know I get this quite often now about our liability management and our debt management strategy. So we're in interesting times. It's one of the few periods where the yield curve has actually inverted, uh, which tells issuers and net borrowers like your company something. It basically incentivizes capital intensive industries such as real estate businesses like ours to shift our debt closer to the long-term range or to the longer range of the yield curve rather than the short term. That's how we read it because, in fact, not only are the short-term rates already slightly more expensive, the market is essentially signaling one of two things: either short-term rates are not sustainable and will go down, or the upward pressure on long-term rates will eventually manifest and long-term rates will go up. Now, given that the cash and business cycle of CLI is anywhere from 3 to 4 years, which represents the time period from land acquisition to actual sales and then turnover of the units, then what we want to do, or what you see here, is the result of our actions from the past 18 to 24 months when we issued bonds, when we had corporate notes, where we actually secured and rationalized our debt maturity towers, and you see a significant portion of debt from 2026 onwards. So this allowed what this is it is an exercise in liability management where we spread out a significant portion of our debt on the longer end of the curve, and we fix the amount of that longer end, allowing us to stabilize our cost of debt. So our overall blended cost of debt at this point stands at 6%. So again, yes, it is creeping up because of base rates and deval rates and reference rates are going up. But we have and will continue to look for opportunities to optimize our debt maturity profile and through liability management exercises. Okay, next slide, please. Okay, so if you have any questions, please type them in the chat box, and I look forward to engaging in and answering your specific questions later. So back to you now, Franco.
Yeah, sure. Grant, thanks again for the very thorough presentation on our financials. It does reflect the gains we are making on the field, definitely. I'll start again with Land Bank. So as you know, CLI adopts a acquire to develop strategy. We've been maintaining our land bank just over 1 million square meters while growing our assets 13 times from 7 billion to now 90. So you can see how productive or how efficient we've been over the past years and continue to be. And you can see our OPEX growing 70%, but for good reasons, because we have to support the operation, keep our customer service high, keep our quality good. So our latest acquisition was in Butuan, and as we speak, we are now looking at sites in Luzon. So I'll be actually in southern Luzon next week, and then there's going to be a very strong move for us to look for our first site in Luzon. Aside from Palawan, which we really consider part of Luzon as well, but our main Luzon would be starting in southern Luzon. The next slide. So here we announced that we will be spending over 13 billion this year. We have spent 2.7 billion so far in the first quarter, primarily in residential development. Okay, next slide. So you can see our growing, blossoming portfolio, primarily still residential, but with very prime office spaces, internationally branded hotels, mixed-use developments in the primest areas in Vismin, and townships that are emerging also in the Visayas Mindanao. Next slide. Okay. Like this is what I really want to focus on, right? You can see earlier the leading indicator of sales. We sold over 5.2 billion of reservation sales in the first quarter. And just to share with you, these were sales from existing inventory, not even new launches, since most of our new launches have been pushed to this quarter, no? So we're launching now new projects. But I want to highlight something very important. Across all our units, net of whatever has been canceled or resold, we are 94% sold across our 30 plus thousand inventory. Isn't that good news for our investors or good news for the market in general? Next slide. So this would be the complete portfolio of residential units. So across 34,000 units, we are 94% sold. From those recently launched or launched within the last 1 year, we are at 90% sold. For those we are constructing or about to be turning over, it's at 94. But for all those completed at 98. I think it's worth checking the industry. I feel that this is performing above the industry. Simply because we are in a demographic sweet spot and a geographic, aside from demographic speed, a geographic sweet spot here with an emerging middle class and not enough supply. So this is very good news for our investors and for analysts also to keep track of. Next slide. I'll just quickly breeze through our progress of the residential portfolio. So these are the projects we recently launched in the last 1 year and already 90% sold, generating over 16 billion in sales value. So that has been reflected in the past 4 quarters. So you can see here like our first Palawan condo, our condo near the city center of Cebu with Calle 104, our East Village project in Davao. So we are preparing actually for a West Village project because we are running out of inventory already here. So stay tuned for that. The Buenos. Next slide. So you can see here our construction in progress, and it's already 94% sold. So our major priority this year is really to deliver projects as timely as possible. And of course, the company is eyeing at least 10 billion in, I would call loan takeouts. So we're turning over units and to collect the balances of these units, and we're looking at over 10 billion in collections this year, cash collections this year. Next slide. And you can see our completed portfolio is really very spread out already in the major cities in Vismin. Right, next slide. So very quickly on office and retail projects, we have a healthy 30,000 of gross leasable area. And you see this 47,000 that will be turned over in this year and next year. So we'll be over 77,000 and then inching towards 200,000 when our bigger retail and office portfolios will be coming online. The good thing is there's a growth in leasing revenue, which I will show later. Next slide. So you can see here we have new retail projects coming online, like our 38 Park Avenue, which has very prime retail spaces in Cebu IT Park. You have this Patria de Cebu development that is really going to activate our downtown area. It will be the newest and I believe largest single development in the downtown area of Cebu in recent memory. So this is supposed to really draw people to downtown with new conveniences, with good parking, with good planning, good and responsible planning. And then you see here on the bottom right side, this is CLI's first major mall with more than 20,000 of leasable area in Astra Center. You can see how huge the project is. So when you arrive in Cebu and drive from Mandaue to the city, you won't miss this large complex, over 130,000 of floor area in a 1.5 hectare site here. Next slide. So hotels, so we're very excited about hotels, and we already emphasized this during the annual briefing about how this is potentially one of the best hotel portfolios in the Vismin region. No? And look at this, 79% growth in our hospitality revenue. The revenge travel is real. It's here, and we offer the finest resorts here, or the warmest hospitality, of course, here in the Philippines, and I would believe in the region. Next slide. Just to emphasize again that we're very excited this year because this hotel revenue is bound to grow this year because we are opening 3 new hospitality properties this year with Life, Cebu City, an Ascot brand, Bacolod, City's Bacolod, another Ascot brand, and the Pad, our first co-living brand with a dorm and hostel. So you'll have 657 keys added to our portfolio and contributing to our hotel revenue this year, which we're very excited about. And you can see these other brands coming online 2024, Radisson Red, the first Radisson Red in the Philippines. You'll have our Mags Peak Balamban Mountain Villas. We'll show you some pictures later. You'll have our very highly anticipated Abaca Resort Mactan, our luxury boutique resort, our Citadines in Davao, our Mercure in Cebu, and our crown jewel, our Sofitel Masters. So you can see these really coming online, and they're very much on time in the construction. Next slide. Okay, and for our townships, I want to just provide a brief update on this very exciting offering of CLI. Next slide. I want to show you our progress in Davao. So you can see here our Davao Global Township at 100% site development. The widest privately developed roads in Davao, the most connected design. So we are opening the roads to the public here, which will connect 4 or 3 major arteries in Davao, from Quimpo Boulevard to MacArthur Highway to all these major roads in Davao this end of May. So for the Davaoenos there, we're very excited. And of course, this will be the most well-lighted streets in Davao, the most secure. So we're going to open this up to activities and very exciting market offering to activate the area. So you can see here also we're building our retail play, over 10,000 square meters of leasable area in our city center and the pads. So this is like an LA mall feel, similar to the Grove in LA. It will be highlighted by some very sustainable roofing materials that will provide cooling and good shading in our mall. So we're very excited for this. And of course, our East Village development is being constructed here on the southeast side as well. So thank you to Davao for entrusting us with, or supporting us, and we look forward to seeing you biking, jogging, driving along here, and having a great time.
And constructing their buildings.
And constructing their buildings here, and you can see here a park as well. So next slide. Okay, and just a few updates with our, of course, Xavier Nresa, which is slated for land development very soon, and the initial components also will be announced very soon as well. So some significant milestones, I can just quickly breeze through this so that Grant can handle most of the financial Q&A later. So our highlights really was this topping off uh, of our Paragon Davao. Our city means Davao with our premium One Paragon Place, and it's shaping up very well. I'm very proud of the clean and quality structural development of such building. It's fully sold out, and we're targeting to deliver the residential units by early next year. Next slide. So this is a welcome development of ours, showing you the I would say agility of CLI. During the pandemic, everybody wanted to be not only in the beach but also in the mountains of Cebu. So we were able to be part of this beautiful 20-hectare property, just 50 minutes away from the city. So we recently opened Mags Peak for the Holy Week activities with our spiritual features here with our chapels, rosary walks, and our Way of the Cross. And then we are about to start development of our sustainable villas, which overlooks Balamban and the beautiful mountainside of Cebu. So just for to invite you over to Cebu. Next slide. So this is very exciting. We own this this development called the Pad. That's our first co-living brand. And even now, as we are about to complete development, we already have pre-commitments for more than 2/3 of the dorm units, pre-commitments or pre-leasing interest in these units. So there is a need as things are opening up. People are moving back to the regional hubs and need an affordable place to stay. So I think co-living, as you know, it allows you 1, 2, 3, or 4 to share a room on a short or long-term basis. So we're able to position ourselves here, and we're quite excited about the results that it will produce. Next slide.
I'll just add to that. Especially it's so well located because it's right beside the major BPO center of Cebu, and it's actually the BPO market that is quickly filling up, and already is filling up the demand for spaces like this. In fact, I actually think we might not have built enough given the rate at which we're getting
it's
reservations.
just 150 dorm rooms and I think 120. But in terms of beds, it's more than 300, 300 beds. Okay, so just a few more slides from me, and we hope to interact with you over the Q&A. Presenting to you our very strong pipeline here. So you'll have us, our diverse offering of residential with our Casamir Towers Mandaue last tower. Since we are close to sold out status in the first 3, we're launching our Mindara Residences, another middle market green development in Davao, in our LPU township. We're due to the strong success of our first 2 towers in Mantra Residence Cebu, inching up to our 90%. We're opening our last tower as well here, Tower 2. Of course, the highly anticipated Costa Mira Mactan Tower 3 and 4 will also be brought to the market very soon, since our Tower 1 and 2 are well under construction, fully sold. Now you have our Belmiro Heights, Davao, and Casamira Homes Davao. So very excited, our first housing project in the largest city in the south. So we are launching our Casamira Homes Davao first, and then followed by Belmiro Magtuod. Then we have our Belmiro in Consolacion, and the last 2 towers in the East Village. Ooh, that was a lot.
Yeah.
But we need to launch this because we are 94% sold across everything, no? So I give a lot of credit to our sales support team. As you know, we're generating over 20 billion of reservation sales without an in-house sales team. What we do is a sales support team, and I give a lot of credit to the very supportive sales support team that enables the brokerage community to find success and deliver well on their commitments to their buyers. So hats off to our sales support team, headed by Ms. Rose. Next slide. Of course, so this is where we are very busy of. We are turning over projects because it's not in the launching where the success is. As you know, it's really at the end. where we turn over the units to the satisfaction of our buyers. We also turn around very strongly on our cash flow. So we have over 15 projects we're turning over as we speak now, and we're very thankful to all the bankers who have supported us. We're accredited by all major banks, giving good options, home loan options to our buyers. So these are like some samples in Bohol, Cagayan de Oro, Naga, Cebu, and Iloilo. Okay, so with that, just want to also point out a few of our condos that we're turning over with ongoing turnover. Next. Yeah, at this point, I'd like to thank again our analysts. There was a very good attendance today. I know we prefer actually face-to-face because it was very interactive when we were having that face-to-face annual briefing. So hopefully in the Q2 briefing, we'll be back in Manila to be there with you and have that 2-hour Q&A like we had last time. But for now, I hope we'll make do with this online briefing.
When we expand when we do expand in Luzon, not only on our business, but we'll also put up an office presence for all administrative and other matters in Makati. We'll make sure maybe we'll have our next analyst briefing when that office is up and running.
Right, so we'll be at Arnaiz Avenue in Pasay Road by the end of the year. So we can open up.
Okay, sir. We have a couple of questions here in the Q&A box. So this is actually a question from Matthew Go.
Yeah, Clark, I'll take some of these. So the first one from Matthew Go, if you can, I'll read it out. Any news that we can know of regarding the risk classification of unissued, I'll just specify here, unissued common shares to preferred shares. And no new news to share aside from what we disclosed, but I think it's worth explaining or maybe elaborating a little bit on our motivations here. So to be clear, there is nothing imminent or there is no deal or issuance or offering that we are working on or that we are applying to the SEC for. It's not that. It's when we surveyed the market, we noticed, and this is an observation and a learning, that the kind of preferred shares being issued either on a public offer basis that will eventually be listed on the stock exchange, or even on a private basis when we studied capital market issuances, required a certain type of preferred share. So to be specific, and if you look at our disclosures, those preferred shares are, the market standard are, they would be cumulative preferred shares, cumulative of the dividends, they would be non-participating and non-voting, and we did not yet have those types of preferred shares on our authorized capital stock. So what we simply wanted to do was to convert a small portion of our unissued common shares. So no dilution, no existing stocks will be affected here. To convert these authorized and unissued common shares into these types of market-ready preferred shares, so that we give ourselves the option and we give ourselves the readiness to be able to issue and offer these preferred shares if market conditions are right, as efficiently and as quickly as possible. Because as I think anyone in the investment banking industry knows, time is of the essence. If the deal is right, the conditions and macroeconomic factors are conducive, and we want to strike while the iron is hot. So this gives us options, but nothing imminent at this point. Thank you, Matthew.
I'd like to read this question from RC. How different?
I can answer it. Go ahead.
For Sir Franco. How different are the gross profit margins of the premier mid-market and economic housing projects? Is this the mix of brands a major determinant of the GPM, or is the GPM more related to input costs?
So yeah, good question. Actually, we target the similar gross profit margins regardless of the category, whether it's high end, middle market, economic, or we are able to achieve at least 45% GPM to 50%. So it's really us, as you said, understanding input costs. No, if the land is this much, so for example, I'll just share a specific example. If the land is above 50,000 pesos per square in Cebu, this cannot be a affordable condo or even a mid-market. We will already inch up towards the premier segment. So with a higher input cost of land, and of course a higher construction, because if it's a premier project, we have to provide more amenities, provide a better design, more glazing. So the selling prices need to play around or need to match that input cost, no, or that cost of sale. The good thing with places like Cebu, Davao, land costs, although inching up, are still, I would say, reasonable, and such that we are able to offer a good value for money. So, because our high end here in Cebu would be 200,000 per square meter condo. The high end in Manila is 500,000. So there is still that affordability and resellability, no, with a good, I would say, rental yield, if I would put it that way. So that's how we look at a case-based basis. Margins have to be the same. And you can see it in our result. We're at 45, 46%, 45, 50%. And in spite of the very heightened inflation last year, we managed to keep it because we've also been very nimble and agile such that we're able to adjust prices or stretch terms. Now we adjust the price, but stretch the term a little bit to make it slightly more affordable. So that's how we go through the process of deliberating or protecting our margins. So thank you for that question.
Thank you, sir.
Franco, ako
Yeah.
alam. So we have 7 questions on queue,
Yeah.
5 of which are asking about what you mentioned about our expansion.
Yeah, sure.
Luzon. So
Sure.
everyone, there are 5 questions. I was looking at it while answering, asking in different ways the same question about where in Luzon and maybe where in Luzon, what our plans there are. So I think the market and people are looking forward to that. And
Sure. So regarding our plans for Luzon, we announced this during the annual briefing that with what CLI has learned or mastered in Vismin, we're very much ready to take on Luzon. However, we really want to bring our affordable products first, starting with our housing offerings. Our Casamira brand is the most successful housing brand in the South, just due to its good mix of prime location, affordability, good designs, good amenities, and good property management. We still manage all the properties we develop, and it's always a work in progress to perfect that process. So we're looking at the southern Luzon first, looking places like Camsor, Naga City, Bicol. Then we're going to look at Batangas City, Lipa next. So we're looking at that's closer to where we are. So we're coming in from the south first initially, and we feel that like cities like Naga City are similar in kind of demographic to like Bacolod, no? Like a 500,000 population. Naga is like it's 300,000. So we're eyeing these cities that have really potential for growth, well governed, and also feed to their neighboring towns and cities. So that's the quick answer for it. And of course, so it's very easy for us to do for high rise, no? So if there's a right property or there's a right development that will allow us to apply our very successful high rise projects, of course, we can accelerate that timetable, but our immediate priority is housing because there is really a big need. We want to contribute to the government's goal, 1 million houses, supposed to be the goal per year. So we want to help that. And Luzon is still, of course, the biggest population in the country.
Are we doing JV projects in Luzon?
When it comes to housing, CLI does its housing 100% by CLI. So we don't do JVs for housing just because it's a very quick turnaround project and something we've really mastered over time. Our JV projects are usually with high-rise or township developments. You want to add about Luzon, Grant, since you're from there?
Well, I'm personally very excited. I know how high the potential is and how fertile the growth is in the Calabarzon area. It's a great expansion area. Metro Manila is very saturated. So what I really want to emphasize, and it's something that ako as as a city boy who grew up in Caloocan, spent my formative years around Manila, Binondo, Chinatown. It is very saturated, but the fact of the housing demand, the deficit of how much more houses are needed to be built all over our country. My eyes were really only open when I started my getting to know Cebu and Masters even during my time as your banker, and going outside of Metro Manila. That is where you start realizing that there is so much opportunity and so much, I would call it, so much opportunity for industry players like Cebulan Masters to focus on underserved areas. And just outside Metro Manila, the places where you already mentioned, in Batangas, in Cavite, in Laguna, these are all very rich grounds to grow. In fact, if you look at demographic growth and income growth and even GDP growth in these regions, they're one of the highest growing regions now. So, in fact, I know we have to step up our game. Many big developers have already had a head start in these areas, but there's still room to grow. The last thing I'll say is I remember driving through Cavite. I must have counted over 100 different housing developments. The kinds of which we are developing, the kinds of which we are delivering, and I'm just proud to say that at much better quality. I really, I drove through these provincial roads in Cavite going, and I saw housing developments, and I know we can compete, and I know we will stand out with the kinds of products and on the quality and pricing that we can deliver. So ako personally, I'm excited for that.
Yeah. So when I say South Luzon, it's Calabarzon and Southern Tagalog. No?
Yes.
So from the southeast to the southwest, and we're very excited. Of course, I spent 8 years, 9 years working in Manila, so I'm excited to spend more time with my Manila friends, and of course my personal connections there in the Southern Tagalog, Calabarzon region as well. So we're very excited to do so. Any related questions, Clark, regarding Luzon?
We have answered everything already, sir. But let me read this question from Aaron Ronquillo. Do you have demographics of your buyers?
Oh, yes. So our CFO reported earlier our usual buyer profile. It's in the sales slide. So the good thing with CLI is we are an end user residential player, meaning when let's say a speculative buyer comes to us that they want 5 floors, we say, no, thank you. No, thank you. So we like end user, and that's why you see healthy reservation sales, minimal cancellations. So we are 58% locally employed buyers, 30% OFW, and 12 for investment or business. And in terms of nationality, our buyers are 97% Filipino and only 3% foreign. I'm very happy with our demographic because these are the one we need to target. We need to help. This is the one.
I'll just go one layer deeper there now. Kasi, some people might say, well, why not? Sales are sales, revenues are revenues, right? But we're here for the long haul. We're here. The property will be there long after a sale is done. So if you're selling to the kind of buyers who are buying out whole floors, who wants to flip it, or maybe perhaps get to sublease or sell it down to the kinds of buyers that may not be as permanent or who may not be have a long-term horizon in building up a community as those primary buyers we're targeting, it affects the quality of your property. It affects the reputation and how your property is known. So we want to be known as, okay, it's a CLI property. That's a real thriving, healthy community. It's somewhere where the residents and the developer continues to be invested in its growth, in its beauty, in its value as it appreciates. So this is not just a call of revenues are revenues. It's a matter of having a long-term vision of what kind of communities and projects we're actually building. Okay. By the way, at this point, I'd like to perhaps invite everyone and let everyone know we were actually invited by the Philippine Stock Exchange to be in their event called the STAR event. It's Strengthening Access to Investors Day. So we were invited in this prestigious event. Only a few companies are invited here. I think less than 15 are, and in fact, most companies are the index companies there on the PSDI. So we're honored and proud to be one of those companies. So if you're interested, I think, I'm not sure if the marketing materials are out, but we'll be presenting CLI to on this event that I know is sponsored by both Bloomberg and FMAP, the Fund Managers Association of the Philippines. We'll be presenting on May 9 in the afternoon. So we'll see you all virtually online for that event. But we'll actually be presenting pretty much what you see here. But then, of course, if you have friends who missed this and want to interact with us, we'll be there again in May 9.
A few more questions. Related also to sales take up from Wendy, our friend from CLSA. So may I know CLI's target sales take up and launches for the year 2020? How much were launched as of quarter 1?
Sales take up and
launches for
okay.
2020.
Sige. I'll take up and then maybe Franco can take launches. So take up is in that slide on reservation sales. In quarter 1, we have sold 5.225 billion pesos worth of real estate products, which is a growth from the same period of 4.5 billion last year. So our 2022, we hit 18 billion. And without naming or without very being specific with our targets, let me just say that, Wendy, that we are targeting in the area, we're definitely targeting a growth number from 18 billion. We're going to, we know we can confidently beat that with, but the few external factors in play are permitting and sometimes there are supply chain considerations and when is the right time to actually launch these projects. But based on the trajectory, we're looking at the same type of growth rate same type of growth rate and trajectory that you've seen in the previous years. So from 18 billion, we know we can grow and more or less at the same rate.
Yeah, so in terms of launches, so this will be our biggest year in terms of launches. We're looking at 29.7 billion worth of new launches this year. So, and this does not include anything in Luzon. So these are all our Vismin portfolio for this year.
Next question, sir. This is about CapEx. Hello, can you elaborate on the 13 billion CapEx for the year and any fundraising activities planned also?
The 13 billion goes into the construction of already launched projects and already sold out projects, if I may add. So across all the projects that we have already launched and sold out some years, in fact, last year and 2 years ago, most of that capex will go there. There are no immediate fundraising plans. In order to address that capex, our internally generated funds and our currently existing available facilities from our different investors should suffice for this. Now, having said that, we are always on the lookout and we're always keen to maximize our capital structure. And this is always in flux, meaning as interest rates go up or down, and depending, as I mentioned earlier, depending on how the yield curve is behaving, which right now is in a twilight zone position. It happens very rarely, but our yield curve is inverted. So there's an opportunity there for us to look at our debt and liability exposures, both current and maybe even up to 24 months, and see if we can push out those maturities to longer term maturities, because why would I pay a higher rate on short-term maturities where I can actually get slightly lower rates at this point, given the spreads are just about the same. So we're always on the lookout for those kinds of opportunities. So if ever we do some kind of fundraising, it's either in the realm of liability management, or it could be if certain very attractive equity ideas present themselves to us.
Thank you for that, Sir Grant. The next question is for Sir Franco. Any updates with the 100-hectare Minglanilla reclamation? So last October 2022, the Central Provincial Reclamation Authority, or CPRA, approved the Minglanilla Reclamation and Industrial Park Development Project of Mori Development Corporation. So what's the status of this project already?
Yeah, thank you for that question. So we are actually in the final stages of our tendering. As you know, this is a very significant project, and the consortium is 80% owned by Sibulan Masters, Ming Mori. So it was a long tendering or bidding process. So we've narrowed it down to the best contractors who are most suitable for the project. So we will provide more updates soon, as soon as things are firmed up and when the actual construction will have its firm timetable. So thank you for the question.
Last two questions, sir, from Rizal. Are there any plans to put another Villa Casita?
Yeah, good question, Rizal. Socialized housing is something close to our hearts. If we can do more, we'll definitely do more. I think with socialized housing, what is very important to me, it shouldn't be very far from the needs of our residents. Meaning, in socialized housing, we can only sell up to a maximum 580,000 pesos. So meaning we have to look for affordable land, build also at an affordable cost. So we were just very particular that you shouldn't be at least 1 hour away from a major city or major town. But I believe the government's doing its part also to make sure our ceilings are more reasonable so that we can at least not compromise on a good location and a good product. So, but as you know, we've built one tenement condo for Cebu City, and the second one in Mandaue City is going up already using precast vertical development. So we're doing our part really to help all Filipinos now with housing. So last question.
Yeah, this is from Miss Edith. Sir, why is Southern Luzon the first pick of CLI?
So at least if there are no flights, I can do a barge land trip from the south. No, but kidding aside, when we went to places like Bacolod or Cagayan de Oro, and there's probably just 1 or 2 condo buildings there, no. So we feel excited about it, man. We don't see a lot of new large developers or listed developers in the region, or might have been there, but no follow-ups with new projects. So we feel that it's due for really more developments. Aside from the population there locally in Bicol or Naga City, we're looking at the OFW population, and these have good and strong OFW population as well. And our brokerage network has signaled to us their excitement. It's really about listening to brokers, listening to agents, and they are very optimistic about our type of development in these regions. So hope to see you there now during our first groundbreaking there. Okay, so I hope you will build near the beaches of Batangas. No high-end development yet. We go where our strength is with our quality housing developments. But we can easily do beach condos because we've done that. We've done that in Bohol and Mactan.
Oh, Mactan, Bohol, fully sold out.
Yeah.
All right.
Thank you. So yeah, that's 1 hour. And
thank you guys, everyone, for your time. On behalf of CLI's management, all our hardworking team, my team here, the IT team, Junax, Clarissa, Bev. I don't mention it that often, but I really appreciate all the work that they do. And it is really the entire CLI team, our accounting, our finance, our construction engineering. Everyone contributes to these results. So we all thank you for following us, and we hope to continue to deliver these kinds of results for you in the foreseeable future.
So on behalf also of our CEO Joe, who she dropped by earlier to check on all of us. Thank you again for the support, and we'll be there in Manila for our second quarter briefing. So see you again soon in a few months. Thank you very much.
Thank you. Guys, thank you.
Scientific Luzon. Yeah, scientific.
We build a place for you to call your home. Hand in hand every step of the way. Know that we're here to stay. With hands on service right from the start.